Welcome to the Confident Retirement Podcast. Is doing the most important things alone a good idea? How comfy are you with your choices when it comes to life's biggest decisions? What is real peace of mind with financial confidence, and how can you get it? Chris Fleming and Mark Peachy are the founders of LPF Advisors in Sarasota, Florida. On the show, they bring together the best and brightest minds to share with you how to have a more confident financial picture. They empower listeners with simple, common sense and financial wisdom. And now, here are your hosts from LPF Advisors.
I want to welcome everybody to the Confident Retirement Podcast, brought to you by LPF Advisors. I'm your host here, Chris Fleming, as always. And today I have the honor of welcoming Yvonne Cort to the show. For over 20 years, she's been focused on resolving federal and New York State tax controversies for individuals and business owners. She's been named a New York Metro SuperLawyer and has co-authored various topical articles in her field, as well as speaking engagements. Yvonne, thank you for being here. Welcome to the show.
Nice to be here, Chris. Thank you for having me.
Yeah, so you have an interesting backstory. Why don't you take us through what led you to where you are today?
Yeah. When I was in law school, one of my favorite courses was tax law. I really enjoyed it, but it seemed like everybody was interested in litigation, and I ended up clerking for a judge and doing some litigation, and then I actually moved abroad. I lived in England for 8 years and I didn't practice law. And when I came back to the States, it was an opportunity for me to get back into what I really loved, which was tax law. And I was able to combine by doing tax controversy, which is helping people with their problems. I was able to combine helping people, which I like to do, and the minutiae of tax law, which is interesting to me, and writing and talking to people and, explaining things to the taxpayer and explaining the taxpayer's position to the IRS or New York State Department of Taxation and Finance. So it all worked out really well for me.
That's awesome. And maybe if you were able to go back in time and give the younger you some advice, what do you think you would tell the younger Yvonne?
Oh, gosh. Well, I would say, just what I tried to do, which is like to be persistent and be determined and go for what you really want to do,
Awesome.
And so I think that's good advice for a lot of people, actually.
Absolutely. Yeah, let's go for it. That is always good advice. Fortune favors the bold, as they say. Okay, so do you think there are some big misconceptions that people have about what you do or what you can accomplish for them?
Well, sometimes people say, well, I could do it myself, or which maybe sometimes they can work out small things on their own. But, a lot of times people say something that they don't realize can have a different meaning or can be interpreted the wrong way. And when you're talking with people in authority at the IRS in New York State, someone says something randomly, oh yeah, I was in, Florida last week. Right. And they say, oh, this person must have lots of money. I'm going to ask about more details about their income, or, they say, well, when I was back home in Kentucky, and they say, oh, wait a minute, you don't really live here? Well, what have you been giving us the wrong address? You have a second home, and let's audit this part of it too. Right. And, so that can be sometimes
Pandora's box. Yeah, Pandora's box, right? You're opening up.
Exactly. People don't realize there's stories of people who say something they think was innocent, like, oh yeah, that was just, that just went into my, someone just paid me for a little odd job I did. And they're saying, oh, well, how many odd jobs do you have? You didn't put that on your tax return,
The can of worms.
Audit your odd jobs.
Right. That's the can of worms. We don't want to get into those. Okay.
Exactly.
So maybe give me a description of your typical client or an ideal client.
Oh, gosh. I mostly handle two areas. I help people with the collection side, meaning they owe money to the IRS or New York State and we figure out a way to pay it. Or I handle audits. So I help people, when the IRS or New York State comes knocking at the door, they send a letter. So I have two very different kinds of clients there. So let's just say audit for the moment, which is really heating up. I'm handling a lot of audits at the moment. It could be just a business or an individual who just the IRS or New York State decides to audit them. And they, perhaps they've worked with an accountant and reached a certain point. And the accountant says, I can't go any further. And they bring me in so I can go to appeals, or I can just come in from another angle. And it helps to have that distance between the accountant and the attorney, that I can say, oh, this is what the accountant did. This is what they were trying to show, rather than the accountant's put on the spot, trying to remember, or, that gives them that extra space. And, I handle a lot for the residency audits, high net worth people who live in New York, and then they moved out of the state for whatever reason. With the pandemic, a lot of people were leaving, or people who often they have a summer home, they decide to make it their permanent home. And New York State said, well, wait a minute. We think you're still a New Yorker. We're going to audit you. Prove where you live. Prove that you changed your domicile. Prove where you were on every day of the year. And I get involved in those as well.
Okay. So. And I was going to ask you about that, so we can just go ahead and go there. So we have seen a pretty big influx of Northeasterners down to Florida. What do folks looking to change their domicile from New York to Florida need to really be aware of? And what if they're going to keep houses like in both states?
Yeah, what a lot of people don't realize is that it's more than just having a second home and keep, making sure you stay out of New York for 6 months of the year. What New York is really looking for is changing your lifestyle. They're comparing what you did when you were in New York. What was your general way of life? What were you involved in? How much were you, participating in activities like voting, and, but also, belonging to a country club, or what you were doing to be involved in day-to-day life, your business interests, and how much time you spend on that house. Like, did you just renovate your house in New York, and the one in Florida you've had a few years and haven't done anything to? You might, you've got to have a good reason. And so for being in Florida, it's helpful to be involved in the community and to prove that this is where your home, where your heart is. That's what it comes down to. The state, you're trying to prove your intent to make this your home with documentary evidence. How do you prove what's inside of you, with documents? So if you've got a weekly poker game or mahjong game, or, get pictures, have emails back and forth showing that you really do these things, and make yourself part of the community to show it's where this is your home. That's what a lot of people miss.
Okay. All right. Thank you. Now, when someone first gets a notice from the IRS or maybe the state, like in the mail, they send those letters. I know I've had clients call me and say, oh, I'm being audited, or I got this letter from the IRS about this income that I didn't report. What's going to happen? And it looks very official. So what do you think are some misconceptions maybe that people have when they first get that letter? Or maybe the way it's better asked is what they think that you're going to be able to accomplish for them when they get involved, when you get involved.
Yeah. Well, first of all, just be aware there are a lot of scams out there. So there are some companies, I don't remember the exact name, but they created a logo that looks a lot like the IRS logo. And they send out scary letters saying, we're going to come, distraint warrant or something, that really is just not what the IRS or New York State do. Then they'll make it look like it's from the IRS after a New York State warrant has been filed. Anyway, so just be aware that there are scams. The IRS they'll try to phone if they're trying to collect. They will send the notices and then also telephone. And usually there may be a deadline. So watch out for the deadline, because sometimes, there are statutory deadlines that cannot be changed.
Right.
Be aware that if they're saying you owe money, that interest and penalties might accrue. If you just put it aside and don't look at it for a year, not only might you miss your right to appeal and challenge it, or it may be more difficult or more time consuming later, but also it could cost you more money. So do be aware of that. And the IRS may have a misunderstanding. It could be, they may say, oh, you forgot to file this 1099. And it could be you already included that income in your return. You just didn't have the 1099, but your accountant put the income down. So talk to the accountant and make sure it's not being double counted and try to get it corrected. Sometimes your accountant's already sent in the information and the IRS just didn't see it and they send out the letter anyway. So, you do need to be aware of all that. So I would say try to get a professional involved as soon as possible so you can see, help them explain. Someone like me can explain what's in the letter. Your accountant maybe can advise,
right.
what's
you speak IRS. You speak IRS.
Right. I do.
Yeah. I spend a lot of time deciphering what stuff means for clients. Just send me what you got and then I'll interpret it for you. I guess.
And people don't always know which department to go to, I mean, the IRS is a mammoth organization handling millions of pieces of paper. So naturally, they've got, a lot of different offices that handle different things.
Yeah.
And the computer system's a bit antiquated. They're trying to get that up to speed. So it helps to know your way around.
I've heard the best advice is don't ignore it, right? So you want to be responsive and, communicative with the IRS or the state when these things occur. If you just ignore it, it isn't going to go away.
There is a 10-year statute of limitations on collection. So, you do want to, as I say, consult a professional, but it's important to know where you are and where you stand and what's going on.
Yeah. Maybe hope that the letter comes like 9 years and 9 months after or something, the statute. Although I don't think they're pretty far behind at the IRS, but maybe not that far behind.
No.
Okay,
not that far behind.
There are a lot of ways to work out like an audit or a tax controversy. You've written before on installment agreements. So maybe you could explain to us what those are and some tips on those, if you will.
Yeah. So, there are several ways to resolve a debt. And one of them, a very common way, is if someone doesn't have the cash to pay the money, the full amount up front, you can pay it over time. And the IRS will consider, sometimes they will consider up to the statute of limitations. They could give you 9 years to pay, for example, if you have that still left on the statute, and you would pay the same amount every month in general. That's how it works. A monthly payment, that's the same. If you've got, sometimes they might give you a year to get yourself into compliance and, to get yourself down to a number that they think is the right number. I mean, if the IRS thinks that someone is making, has a certain income or has certain assets they could borrow against, they may not want to give them a very lengthy installment agreement.
Right.
So they do have financial information statements to fill out, the Form 433A for individuals, 433B for companies. And, they do have a policy. If you owe less than $250,000, you may be able to get an installment agreement without too much financial information. But after a certain amount that's owed, they look minutely at your finances and they want to see, what do you spend on housing, on your, they have a set amount that what they call allowable expenses. And you may be paying $10,000 a month in rent or in mortgage, but the IRS has done its calculations. And for your county, what's allowable is for 3 people is $2,200, And so they'll say, oh, look, you've got over $7,000 available. We'll take that. Thank you. And so that's basically, and there's a kind of installment agreement if what you owe is something you really just can't afford to pay in the statute of limitations, you may be able to work out what's called a partial pay installment agreement, which would be you pay the amount you can afford. And in the meantime, the statute keeps running and will eventually expire. But they review every 2 years to see maybe you could pay more, or maybe you've just come into some money or won the lottery or something. Okay. Let's see what's going on. So, and
are interest and penalties imputed into that installment?
Oh, yes.
Bank? Okay, I figured it was. I didn't think that.
Yeah. Unfortunately, interest continues to accrue while the installment agreement's going on. That's a very good point, because sometimes people feel, I get this a lot where people say, oh, my tax return said I owe X, and now they're saying I owe this much more, but interest and penalties are subject to collection the same way as the taxes.
Yeah, and interest rates are going up. So that's no good.
That's right.
All right. I have another question kind of goes along the lines with that. So there's also something called a responsible person assessment. You're familiar with that term? So why are those needed? I know I'm kind of switching gears, but why are those needed?
Yeah, that's a really important point. And a lot of people don't realize it. It really applies to people involved in a business. Okay. So if someone's the owner or officer or someone who has a certain level of responsibility in a business, that they make the decisions on how money is spent. I'm not talking about the bookkeeper who's told how much to write the check for. I'm talking about the person who directs the bookkeeper. Oh, this month we can't afford to pay the rent as much. We have to pay the rent. We can't afford to pay the electric bill. We'll put that off for a month. The person who makes that decision. And sometimes that person makes the decision not to pay a portion of the withholding tax and not to pay the portion that they pay the employees, because the employee gets their check net of all that stuff you see on your W-2, all that stuff taken out. Well, the business is supposed to be sending that to the IRS or the state. And sometimes the business owner or whoever's in charge says, you know what, we just can't do it this month. We'll send it next month. The IRS won't find out for a month or so, and we'll pay some penalties. Well, that may be what happens, but sometimes the business falls more and more behind, and it gets to the point that now they owe hundreds of thousands or even millions to the IRS. And the IRS can, because this, you think about it, if you've got a business, let's say that has 200 employees, that's a big chunk of money. And now the government, in order to collect that money, yes, they come after the company, but they will assess a penalty. It's called the trust fund recovery penalty against the responsible person, because that money really isn't the business's money. The business is holding it in trust to send it to the government. And so they can't assess the individual. The individual doesn't owe the tax, but they assess them a penalty equal to the trust fund portion. And they can come take that individual's house, or, I mean, they could come after them personally. They don't usually go as far as taking the house, but they could certainly assess them individually and pursue them for that, to collect that money. Okay.
Wow. We don't want to be in that situation.
No.
Okay. So kind of switching gears here. I'm curious, just for you, we're in January. It's around that time where people have made and broken their New Year's resolutions already. So maybe going forward, what do you see as the biggest opportunity for you right now in your practice?
Oh, gosh. Well, it's been very busy, I have to say. A lot of people have been coming forward because they have audits or because they owe money. At this particular point, it's not just January. It's that the pandemic lockdown time has pretty much ended. We're not in lockdown anymore. And the IRS kind of held off on audits and collection for about a year and a half or more, and they're still behind in doing stuff. But now they're up and doing things again. So they're out there seeking to collect and seeking to audit people. And, I see that as a, for me, that's an opportunity. But also I enjoy speaking about the things that I do. I lecture for a lot of professional organizations. So there's opportunities there as well to do those too.
Awesome. Now, maybe on the flip side of that, Yvonne, what do you see as your biggest maybe obstacle or challenge that you are determined to overcome?
Gosh. Well, I always think there's not enough hours in the day. I don't think I can overcome that. I'm just, working with other people and delegating what I can, and focusing on what I really want to do, focusing on the kinds of areas I want to be more in. And I do want to learn new things as well. There's always things coming up. So, trying not to do as much of the things that, perhaps delegate to someone else the things that are, less interesting, and keep for myself the more interesting ones to help manage my time.
All right. Well, we are defined by what we say no to, not by what we say, not by what we say yes to. Right, Yvonne?
That's an interesting thought. What we say no to defines us. That's interesting. I like that idea.
Yeah, well, I didn't make that up, but I read it somewhere along the way. Part of that useless information that I retain. Okay, great. Now, if people want to learn more about you or contact you, what's the best way for them to do that?
Well, email is really good. My email is, I'm with the firm of Capell Barnett Matalon in Schoenfeld, and my email is Cort, my first initial and last name, Cort at cbmslaw.com.
Okay. And does the company have a website?
We have a website, yes, which is also CBMS Law, Capell Barnett Matalon in Schoenfeld, and I'm on LinkedIn. You can always find me on LinkedIn under my name. I don't have a common name, so Yvonne Cort is,
It'll pop up.
It'll pop up. I'm the only tax controversy lawyer named Yvonne Cort.
You'll be in top on the search, Yvonne. I like that. That's good. Maybe I'll change my name. So I pop up.
You've got a unique name as well.
Mine's
the only
unique.
one who pops up.
I know, mine's unique too. So I guess we're in the same boat there. All right.
And I'll bet people misspell your name a fair amount, right?
Misspell and mispronounce.
Yeah.
It's abound.
People are often putting the U in. I used to get a lot of jokes as an attorney with the last name Cort,
Right.
So, but it comes
fitting. It's fitting. Awesome. Listen, Yvonne, I want to thank you for taking the time to be here with me today. It's been a real pleasure to interview you. Very informative. And I want to thank everybody for listening and watching the Confident Retirement Podcast brought to you by LPF Advisors, where we're hoping to raise the financial confidence of everyday people to another level, one show at a time. Thanks, everybody, for tuning in and watching and listening. Take care. Be well. Yvonne, thank you.
Great. Thank you.
You've been listening to the Confident Retirement Podcast with Chris and Mark from LPF Advisors. For more information on them and retiring confidently, please visit lpfadvisors.com. If your ears are pleased and your mind is now at ease, do share the program with your friends and subscribe wherever podcasts are found.